Let's take it straight to the management of MindTree now, who joins in for their numbers. Mr. Krishna Kumar Natarajan, Managing Director and CEO, as well as Mr. Rosto Ravanan, CFO of the company, join in. Mr. Natarajan, I'll start off with you. Now, you crossed $400 million in FY12, grew at 22%. You are expecting to grow at a slower pace. Do you think this can be in high double digits?
See, we don't give a guidance, so to that extent, it's certainly not possible to give you a specific number. What we are certainly confident is that the way we see our business and the message which you are hearing from our customers, we will grow ahead of the industry average. I think that's what I think we can indicate in terms of how we see MindTree's business and the market for FY13.
So KK, let me try and read in between lines here. According to NASSCOM, Indian IT industry for FY13 is likely to grow in the region of about 11 to 14%. So what you're indicating is that for the current fiscal, MindTree will grow above 14%?
Clearly, I think based on what NASSCOM say, they've given an industry estimate. Our confidence stems from the fact on what messaging and conversations we're having with our customers, which makes us fairly confident that we'll grow ahead of whatever the industry rate would end in FY13.
Mr. Natarajan, there seems to be somewhat a disconnect, because on one hand you're saying that there is some uncertainty in the BFSI vertical. You expect product engineering space, which also faces challenges. Where do you expect then the growth to come from, and what's the likely growth for the product engineering segment as well as the IT services vertical that we can expect?
Absolutely. See, in IT services, like we shared yesterday in the analyst call, over the last few weeks we have started seeing some level of caution, particularly in the BFSI segment. Here again, what we are seeing is that there is a new form of customer, a new category of customer coming in, which is really mid-sized financial institutions which are outsourcing for the first time, where clearly the ability of MindTree to be agile and attentive to their needs is making us position differently. And to that extent, we do believe that that would partly de-risk the softness which you see in the BFSI segment. If you look at other segments like consumer products, retail, we still continue to see customers investing on very key strategic initiatives. Many of them are multi-year projects. Yes, there's a caution and the decision-making time cycles are getting elongated, but customers are spending. The travel segment still continues to be stable. So clearly, segments like retail, consumer products, and travel would lead the growth in IT services.
Also, your realizations for the quarter gone by, they declined by about 3.6% and volume registered a growth of about 5%. Is this likely to be the trend for FY13 as well? Soft realizations and strong volume?
Sure. Our current feeling is that most of the growth in FY13 will be volume driven. Pricing is expected to be stable. Even for FY12, while between Q3 and Q4 there was a increase in Q3 and a dip in Q4, but the year as a whole is relatively sort of stable on pricing. Current feeling from most of our customers is that FY13 will also have a more or less flat pricing trend for FY13 as well.
And Mr. Ravanan, you've also improved on your EBITDA margins by nearly 350 basis points in FY12. You hinted at margins further improving, and you have exited FY12 with margins of over 18%. There will be headwinds now, like investments at the front end for large deals and visa-related costs, salary hikes. How much further can this improve, and what are the levers that you're depending on?
Overall, I would say from the 15.3 that we ended FY12 with, there clearly exist some positives and some negatives for FY13. The negatives, like you mentioned, are the salary hikes that will happen in the early parts of this year, a much higher visa costs in FY13 than what we saw in FY12. And like you mentioned, we are making significant focused investments in the front end to help us position ourselves for large deals. So some of those would be the margin headwinds. However, However, the levers for improving profitability at one level will be the revenue growth. Like KK explained a few minutes back, that we are seeing reasonable traction for revenue growth, so that benefit of the revenue growth will accrue to margins. Secondly, the benefit will also come out of the economies of scale. We are now getting into a level where some of the benefits of scale are being available to us. And lastly, the efforts to continue to broaden the employee pyramid. One of the strategic sort of drivers for this year was to significantly increase our campus intake, which we did this year. That led to the average cost per person in March 2012 about 5% lower than what we started the beginning of the year with. If we continue to execute on that plan for the next 2-3 years, that will help reduce our average per person people cost, which would also then accrue to margins. So those are the levers which we think we have to help us get better profitability. So some improvement over FY12 is definitely possible. However, I must caution that the one factor outside our control is currency.
Take your top client revenue declined in Q4. Number of active clients have also declined during the same quarter. Is there something which is something which could be a gray area for you, because you're sounding confident, but if your top clients are not growing, if number of clients are not growing, how do you propose you will grow for FY13?
Last quarter, we had a change in the top client. It's a European telecom services provider who became our largest client. And during Q3, we had one large transition which we completed, which led to the revenue growth from the top client increasing. And since we have signed large multi-year deals with this client, those transitions have reached a steady state, which is reflecting in the marginal decline in the top client this quarter. There are no uncertainties with this client, and there's no room for concern on this score.
The other point that I'd like to add to that is that it is part of our strategy that KK outlined in the beginning of the year, that our approach will be to choose a few clients, invest in mining those relationships deeper, and where we find that we don't have a solid enough engagement with a few customers, then exit those relationships because we are not relevant to those customers. So that was part of the reason why our number of active customers declined from about 280 in the beginning of the year to about 237 at the end of the year.
And finally, Mr. Natarajan, MindTree's participation in deals have increased. How is it looking in that area, given that you said that there is a delay in decision making, a cut in discretionary spend? So how many deals are you currently pursuing?
See, like Rosto talked about earlier, one of the key strategies for growth this year is to really get large deals, and I think in the last 12 months we have demonstrated the capability to compete against some of the larger players and win our share of business. So the confidence in the organization to win large deals is very high, and we are also upfront investing in getting in the front end, in the markets, senior people who have sort of been in the large deal pursuit, which will involve substantive investments from our side. Overall, we believe, based on TPI data, the number of deals which are greater than 25 million, which are coming up for renewal in the next 12 to 18 months, is close to about 300. We are picking out of them what are the ones where we can compete and win, and certainly we see adequate action in that front, because this team has been in place for the last 2 months, and as they start expanding and getting into the market, we will see more activity on this front.